Welcome to DebtCircle Key Roundups. I am Vijendra.
And I am Leela.
Credit Access Grameen has successfully raised Rs 425 crore through a private placement of non-convertible debentures. Meanwhile, VIP Industries has seen its credit rating downgraded to CRISIL A with a negative outlook, which raises some concerns about the company's debt servicing capabilities. Clearly, these credit rating movements and capital raising activities reflect the evolving landscape of corporate debt. Credit Access Grameen raised Rs 425 crore through non-convertible debentures in two tranches. Rs 325 crores at a fixed coupon of 9.25% per annum and Rs 100 crore at a floating rate of 9.15% per annum, both for 2 years. The fundraising aligns with their strategic goal to build a cost-efficient funding franchise by 2028, balancing fixed and floating rate instruments to support ongoing lending operations and improve their balance sheet. CRISIL downgraded VIP Industries' long-term rating from CRISIL A with negative outlook to CRISIL A- with negative outlook, impacting bank loans of Rs 464 crores. This signals weakening financial health and higher credit risk for the company. The reaffirmed short-term rating at CRISIL A2+ shows some stability, but the key concern is the long-term outlook. Investors must watch upcoming financial results closely for signs of recovery or further deterioration. Infomerics downgraded some distilleries' long-term rating from BBB+ to BBB. And short-term from A2 to A3+, citing the suspension of their Bhopal plant, which affects revenue and increases financial risk. So the key factor is when the Bhopal plant resumes operations. Prolonged suspension could worsen their credit profile and financial health further. Utkarsh Small Finance Bank is selling stressed loans totaling Rs 726.83 crores by March 31, 2026, divided into three pools: unsecured microfinance loans and secured commercial vehicle loans. The sale is as is, where is, and without recourse, meaning the bank won't bear losses after sale. However, recovery might be below Rs 726 crores, impacting profitability. CARE Ratings upgraded Kamdanu Limited's issuer rating from CARE A stable to CARE A+, stable based on their fiscal year 2026 performance, highlighting improved operational efficiency and financial strength. True, but the rating depends on ongoing performance and market conditions. Future financial results or new debt could impact their rating, so investors should watch disclosures closely. IIFL Finance plans to raise up to Rs 10,000 crores through equity or other securities, with flexible fundraising routes like public or rights issues pending approvals. They also increased their domestic borrowing and asset security limit from Rs 60,000 crores to Rs 75,000 crores pending shareholder approval. Anchor investors like Ares Management and Deutsche Bank have approved extending the loan-to-value ratio relaxation on Shapoorji Pallonji bonds until September 30th. This supports a refinancing plan aiming to raise approximately Rs 22,000 crores in its first tranche. Additionally, Goswami Infratech investors agreed to extend maturities on Rs 14,300 crores of bonds by 1 month, with a consent fee increased to 30 basis points, reflecting cautious investor sentiment.
We have some important updates in the debt market that you won't want to miss. That's a significant development, showing continued investor interest in NBFCs focused on microfinance. Yes, and to add to that, Som Distilleries' ratings were also downgraded following the suspension of operations at their Bhopal plant. Stay tuned as we break down what these updates mean for investors and the debt market at large. This diversified funding strengthens their capital base and signals strong market confidence, especially with institutional investors like Sundaram Finance backing the issue, enhancing their financial resilience amid competitive microfinance funding environments. Investors should watch how this impacts Credit Access Grameen's cost of funds and asset quality, as these factors will be critical for sustaining growth and meeting their long-term funding architecture targets. This downgrade reflects operational challenges in India's luggage sector. The negative outlook warns of further downgrades if performance doesn't improve, which could increase borrowing costs and affect VIP Industries' access to favorable funding. Exactly. Given the significant loan exposure, any financial shifts will impact creditworthiness and market confidence, influencing VIP Industries' position among consumer durables peers. This downgrade signals lenders see higher risk now, likely raising borrowing costs and limiting financing options until the plant restarts and stabilizes cash flow. Exactly. Investors must monitor updates on the plant restart and Infomerics' future rating outlook to gauge recovery and credit risk changes. This sale uses the Swiss challenge method, inviting competitive bids from asset reconstruction companies by June 29, 2026, aiming to maximize recovery and improve the bank's asset quality. Market watchers should track bid results closely, as they'll reflect the bank's asset management success and indicate future financial health in a stressed asset environment. This upgrade lowers the company's credit risk perception, making debt financing easier and potentially cheaper. In the building materials sector, this gives Kamdenu Limited a competitive advantage over peers with lower ratings. Agreed. Maintaining vigilance is key for debt market professionals when assessing Kamdenu Limited's creditworthiness going forward. This capital raise, combined with doubling their global medium-term notes to $2 billion US, shows strong intent to boost financial flexibility and tap both domestic and overseas markets. Meanwhile, the new Chief Financial Officer, effective June 27th, brings over 20 years of experience, but shares dropped 3.06%, reflecting market caution. This extension is crucial for the dual currency refinancing led by Deutsche Bank, coming at a time when regulatory clarity from the Reserve Bank of India has improved investor confidence, especially regarding Tata Sons' potential public listing. These moves highlight ongoing adjustments in the market to manage large debt maturities while awaiting clearer strategies on Tata Sons' state monetization and group deleveraging.
Indian issuers like State Bank of India and Bank of Baroda have paused dollar bond plans as investors demand higher yields, pushing spreads wider than before. The market expects further delays until pricing stabilizes due to increased bond supply from India. Meanwhile, Indian public sector units are shifting to foreign currency loans. NIBFID plans to raise up to $1 billion through loans priced between 6.5 and 7%, seeking more manageable funding compared to costly dollar bonds. Indian fintechs like Decento are using the International Financial Services Centre's Authority Payment Service Provider license at Gujarat International Finance Tech City to offer cross-border payments and capital market services, bypassing the stricter Reserve Bank of India rules. The license covers account issuance, escrow, merchant acquisition, and cross-border transfers, letting firms like Xflow build automated cross-border debit solutions similar to domestic INH, which currently cannot handle international transactions. Rake Ceramics India raised rupees 200 crores through senior, secured, rated, listed, redeemable, non-convertible debentures via private placement to fund corporate and capital expenditure. Legal advisory by JSA advocates ensured full compliance and smooth execution across jurisdictions, critical for this complex cross-border issuance. NLC India Limited raised rupees 500 crores through commercial paper on June 24, 2026. They issued 10,000 instruments, each with a face value of rupees 5 lakhs, targeting short-term funding needs. The issuance was disclosed to the National Stock Exchange of India and BSE Limited on June 25, maintaining compliance with SEBI regulations for transparency. Saman Capital prepaid interest totaling rupees 163.07 crores on secured redeemable non-convertible debentures covering 37 series between June 18th and 25th, 2026 ahead of maturity dates in late June. The payments were phased, beginning a day before due date starting June 19th, ensuring compliance with SEBI regulations and clear disclosures to stock exchanges. Worldcard Jewels Limited plans to grant a 100 crore rupees loan to its promoter group company Laxmi Goldona House Limited at 11% per annum interest for 2 years, requiring shareholder approval via postal ballot. The loan is unsecured, funded from retained earnings and securities premium, and classified as a material related party transaction, thus needing a special resolution under the Companies Act, 2013. Swan Engitech Works Private Limited pledged 45 lakh shares, that's 1.43% of Swan Corp's total capital, on June 24, 2026. This raised total promoter pledges to 1 crore 80 lakh shares, or 5.74%. Other promoters hold significant pledges too. Dave Impex Private Limited has 1 crore 88 lakh 91,000 shares pledged, and Swan Realtors Private Limited has 3 crore shares pledged, maintaining overall promoter encumbrance levels.
This pause reflects tighter conditions. For example, HDFC Bank's 5-year bond priced at 90 basis points over US Treasury, but Power Finance Corporation's smaller issuance demanded 105 basis points. Investors are leveraging supply abundance to push yields up, pressuring issuers to reconsider costs. Plus, the Reserve Bank of India's special swap window lets banks sell dollars and repurchase at a fixed rate of 1.5% per annum, removing expensive hedging needs. This alternative reduces reliance on pressured dollar bond markets. This license opens new revenue streams, with Decentro targeting nearly $1 million by the end of 2027, while enabling fintechs to support international trade finance and multi-currency payments for global clients. This expands fintechs' roles in global trade and investment, attracting more fund managers and non-resident Indian investors, and pushing companies to explore licenses in North America, Europe, and Southeast Asia for wider global digital payment reach. This move strengthens their balance sheet amid industry growth. Private placement ensures faster closure and targeted investor reach for such a large amount. Efficient legal handling reduces risks and boosts investor confidence, vital for maintaining strong credit ratings and future funding access. This move reflects prudent capital management amidst market volatility. Commercial paper remains a preferred tool for public sector companies like NLC India to meet immediate working capital demands efficiently. Such timely disclosures strengthen investor confidence, especially for a Navratna public sector enterprise operating in mining and power sectors. This early interest payment signals strong liquidity management and commitment, reassuring investors amid a market where timely debt servicing is critical for maintaining creditworthiness and confidence. Such proactive servicing aligns with regulatory guidelines and supports the company's profile, potentially improving access to capital markets under stable conditions. This loan is significant, representing over 85% of Gold Card Jewels' annual turnover, highlighting the company's commitment to supporting its promoters' working capital needs despite recent stock volatility. Shareholders can vote electronically from June 27 to July 26, 2026, ensuring transparency and compliance in approving this large strategic financial move. Given the pledges within SEBI limits, it reflects cautious financing amid Swan Corp's recent stock declines, including a 32.13% fall over 6 months. The move may signal liquidity needs from the promoter group. The consistent high pledge ratios suggest promoter reliance on internal funding, which investors often watch closely as it may impact stock confidence despite a 5-year cumulative gain of 116.85%.
iFinance allotted rupees 140 crores in senior secured non-convertible debentures to Nederlands Financieringsmaatschappij for Ontwikkelingslanden NV or FMO on June 25, 2026. These are redeemable, listed and rated instruments meeting institutional criteria. Notably, iFinance's stock gained 5.45% in 1 day and over 37% in 1 year, reflecting consistent market confidence alongside this debt issuance. Purple Finance approved borrowing powers under Section 181C and sanctioned private placement of non-convertible debentures at their 32nd AGM held June 26, 2026. Shareholders also reappointed a director, approved executive pay hikes, and accepted clean reports from statutory auditors, indicating strong governance and operational stability. HDB Financial Services increased its borrowing limit from Rs 1,35,000 crores to Rs 1,50,000 crores, approved by nearly 100% shareholder support at the AGM. This boosts capacity for future operations and funding. They also secured approval to securitize receivables and book debts up to Rs 13,000 crores, enhancing capital management and cash flow options. Dividend of Rs 2 per share for fiscal year ending March 26 was also declared. The Indian rupee is stable at 94.3675 per US dollar, supported by a pause in US-Iran tensions and a drop in oil prices. The Reserve Bank of India is also intervening to keep the rupee above 95. After hitting a record low of 96.96 in May, the rupee is set for gains this quarter. However, importer demand limits gains near 94, keeping the currency within this confined range. Sangam India Limited declared a dividend of Rs 2 per share for the financial year ending March 31, 2026 and authorized borrowing up to Rs 3,000 crores at its AGM held on June 29, 2026. Additionally, the AGM reappointed a director retiring by rotation and approved audited standalone and consolidated financial statements without any qualifications, confirming strong financial compliance. Gold Card Jewels Limited is seeking shareholder approval for a loan of Rs 100 crores to its promoter group company, Laxmi Goldona House Limited, at an interest rate of 11% per annum for 2 years in financial year 2026 to 27. The loan will be unsecured, sourced from retained earnings and securities premium, and disbursed in 1 or more tranches. The company's board and audit committee have approved it, pending shareholder consent via an electronic postal ballot.
This private placement signals strong institutional trust. The listing on both BSE Limited and the National Stock Exchange of India Limited ensures transparency, likely supporting liquidity and investor confidence in iFinance's growth trajectory. Such robust stock performance combined with secured debt issuance indicates both operational strength and strategic capital management, typically positive for future credit ratings and investor interest. This move enhances the company's financial flexibility amid mixed stock performance, with a 1-year gain of 52.94% despite a 5-year loss of 36.98%. Such approvals typically boost investor confidence, especially with transparent e-voting results and compliance with Companies Act and SEBI regulations solidifying corporate governance. This higher borrowing limit aligns well with market trends, giving HDB Financial Services more financial flexibility amid growing credit demand. It could support expansion and improve liquidity management. Shareholder confidence is strong, reflected in overwhelming approval rates. Despite a recent stock dip of 1.54% in one day, the 5-day and 1-month trends remain positive, signaling investor trust in growth prospects. This stability is crucial given global uncertainties. The rupee's narrow trading band between 94 and 95 reflects balanced market forces and central bank efforts, contrasting with more volatile Asian currencies sensitive to oil. Meanwhile, the US dollar remains strong, near a 13-month high, as markets expect a Federal Reserve rate hike in September. This could limit further rupee appreciation unless US economic data worsens significantly. The borrowing authorization signals Sangam's intent to strengthen its capital base amid market uncertainties. This level of borrowing under the Companies Act 2013 gives them flexibility for expansion or debt restructuring. That clean audit report reinforces investor confidence, especially alongside shareholder approval of cost auditor remuneration and transparent e-voting processes, indicating robust governance. That's a substantial amount, over 85% of their audited consolidated turnover for 2025 to 26. This loan will support Lakshmi Goldorna's working capital needs and is seen as a strategic move for efficient fund deployment. Shareholders can vote remotely between June 27 and July 26, 2026. This digital process ensures wider participation and quick results, reinforcing transparency in related party transactions.
Tata Capital is seeking shareholder approval to issue non-convertible debentures up to Rs 7,000 crores through private placement. This is to maintain borrowing authority from July 30, 2026 until the next annual general meeting in August. The board approved issuing secured, unsecured, subordinated, perpetual, market-linked or green bonds at coupon rates and tenures set by market conditions. Voting is via postal ballot from July 1st to July 30th, with remote e-voting only. IDBI Bank's board approved early redemption of unsecured, redeemable, non-convertible senior bonds totaling Rs 5 crores, issued in financial years 2008 to 9 and 2009 to 10. This aims to optimize their liability profile by retiring older debt early. The bonds are senior, so they have priority over other unsecured debts, but when converted to equity, early redemption helps reduce interest obligations and improve balance sheet flexibility, aligning with regulatory transparency under SEBI's listing obligations. Lodha developers raised Rs 300 crores through 30,000 secured non-convertible debentures, each with a face value of Rs 1 lakh. The coupon rate is 8.28% per annum, paid semi-annually, maturing in 3 years and 8 months on February 15, 2030. The NCDs carry a first-ranking charge on company assets, providing security to investors. However, a discrepancy in the first interest payment date, seemingly inconsistent with the June 30, 2026 allotment, needs clarification to avoid confusion. CARE Ratings Limited has reaffirmed Fairchem Organics Limited's credit ratings at CARE A stable for long-term facilities and CARE A1 for short-term. They also increased the long-term bank facility limit by Rs 50 crores, raising it from Rs 123.99 crores to Rs 173.99 crores. The key will be how Fairchem Organics uses this increased credit limit. Effective deployment without straining credit metrics is crucial to maintaining their stability and creditworthiness. CARE Edge has upgraded Yes Bank's long-term debt to CARE AA+ with stable outlook, citing stronger profitability and asset quality. The bank's profit after tax rose to Rs 3,476 crores in fiscal year 2026 from Rs 2,406 crores the previous year. Emerald Leisures has set a related party transaction limit of Rs 100 crores for financial year 2025 to 2026 and plans to seek shareholder approval for issuing non-convertible debentures and other debt instruments. They also propose governance reforms like appointing a nominee director and reappointing directors retiring by rotation, aiming for better oversight and stability. Emerald Leisures has set a related party transaction limit of Rs 100 crores for financial year 2025 to 26. They also plan to raise capital through non-convertible debentures and other debt instruments pending shareholder approval at the AGM in July 2026. The company is also proposing governance reforms, including appointing a nominee director and reappointing retiring directors, aiming for stability and compliance ahead of the AGM.
This interim approval is crucial given the existing borrowing mandate of 30,000 crores expires on July 30th. It ensures Tata Capital can continue raising funds smoothly within overall limits. Market-wise, Tata Capital stock shows mixed performance, down 1.48% in one day but up over 18% in 1 month. This move could support their funding strategies amid this volatility. This move shows proactive debt management amid volatile stock performance. Despite recent declines, the bank's longer-term stock gain of over 117% in 5 years suggests strong underlying value supporting such strategic decisions. Market-wise, early redemption can signal confidence to investors, potentially stabilizing bondholder sentiment. It also reflects IDBI's intent to strengthen financial health by managing legacy liabilities effectively amid fluctuating market conditions. This issuance reflects typical real estate sector financing, using secured debt to fund projects and manage liquidity. The floating coupon, linked to the 3-month Treasury bill plus 3.03%, keeps interest payments aligned with market rates, balancing company risk and investor returns. Investors should monitor Lodha developers' quarterly results for timely interest servicing and principal repayment. The 8.28% coupon impacts future cash flows, so ongoing financial health and project progress will be key indicators for market confidence. This enhancement boosts Fairchem Organics' financial flexibility, helping with working capital and capital expenditures. The stable ratings reflect confidence in their financial health, which is positive for lenders and investors watching their growth and debt management strategies. Exactly. Market participants and investors should monitor the company's financial disclosures and management comments closely over the next few quarters to assess ongoing credit risk and growth prospects. This upgrade will lower borrowing costs and boost investor confidence. However, ongoing litigation over additional Tier 1 bonds poses risks, potentially impacting the bank's common equity Tier 1 ratios. Market watchers should monitor these legal issues alongside asset quality improvements. This move formalizes intercompany dealings and expands their capital raising options. Shareholder approval at the annual general meeting on July 23, 2026 is crucial for these financial steps. Investors should watch the AGM results closely, since the success of these proposals affects the company's funding flexibility and governance strength. This move formalizes intercompany dealings and broadens funding options. Market-wise, it signals financial discipline, but investors should watch the AGM results closely, as approval is needed to execute these plans. These changes could improve oversight and confidence. However, investors should assess the scale of related party transactions and the increased debt reliance to understand potential risks.